welcome to Policy for Normal People. Welcome back, listeners and viewers. Happy to welcome Marcus Sturdivant, Senior, back again, this time for our October monthly market update. As you know, this is our special edition of my longer version of Policy for Normal People, sponsored by my business, Amada Development Services. And this special segment is a short version focused entirely on the market, just giving you quick updates, which align really well with Marcus's wonderful tagline, helping Main Street meet Wall Street. Marcus, welcome back.
Hey, Christy, how are you?
I'm doing okay. It's been a crazy month, not just in the markets, but in life in general. But hey, we're here, so that's good. So how have you been? How are things going for you on family and everything good?
Yeah, everything's fine. I can't really complain. Just another lovely day in paradise, nice and rainy down here. So,
Oh, is it? Yeah, it's not raining here. It was supposed to, but beautiful fall colors, and I've been trying to get out and enjoy them before the rain does bring the rest of the leaves down. It's pretty nice. So let's jump into it. October has been yet another kind of crazy month, I think. I've been distracted with a lot of things business-wise and all good and everything this month, but I haven't had as much time to pay as close attention. So I love when we do these updates. I hope our listeners and viewers feel the same. It's a great way to kind of do a recap. Let's start with what's happening right now, right? There's a Fed meeting happening, I think, and there's some discussion. I saw a Wall Street Journal notification just pop up on my phone indicating something to the effect that Chairman Powell is not promising another rate cut, it sounds like, anytime soon. What do you make of that?
right, yeah. So as we speak right now, Wednesday afternoon, the Fed just announced that they will be cutting rates this month another quarter basis point, 0.25. They decided that, but they did announce after that they will be taking this approach as a meeting by meeting approach. They won't have a chance to cut in November. That's now a live meeting, but December is the next opportunity where they would have to adjust the interest rate. Chairman Powell said that he went way back more to his position of being data dependent. There's a lack of data right now. So he's not promising a December cut. The markets have pretty much priced in a December cut, another quarter point cut, and they had actually priced in partially into a January cut as well. So
Okay, so in fact we've had what total of 2 cuts since when? Since like August, September? I've kind of lost track of what's going on there.
right, yeah. So had a cut last month. They were having a cut this month, and potentially a cut in December. So pretty much following the same pace as last year, where we cut 100 basis points from the Treasury, from the Fed funds rate. But this time it's a little bit different as we have less data and the job market is not quite as steady as it was. Inflation is sticky. So just a little more
Yeah.
murky.
Yeah, so we've been following that, you and I, talking about how there may be some latent impacts of everything from tariffs to the Fed rate cuts and so forth, and then also how businesses are behaving and reacting in the market too, large and small. With regard to the Fed rates, again, I'm always curious about this. That it's an incentive often to encourage home buying. It being one of the biggest investments that a lot of normal people make, families. Have you seen any stats on that in terms of is it incentivizing people to buy? I know that the rates in this very highly priced market of Alexandria, Virginia, where I live, I don't know what it's like where you are there in North Carolina, but prices are very high here in general and have been for a long time. It's a highly populated area, lots of demand for housing, but they are coming down. The prices of homes are coming down quite a bit. And yet I'm curious whether people are skeptical and afraid to make the jump. Are we seeing Main Street buying more homes? And when I say that, I'm specifically cutting out, kind of the uber wealthy that, could buy at any time and maybe just trying to capitalize on some lower rates. But people who truly couldn't afford those higher prices, are we seeing some movement in that with people buying homes?
Yeah, so last week they actually saw an increase in the home start applications for people looking to buy homes. We're seeing the mortgage rate decrease as we're seeing the 10-year yield decrease. It's been around 4%, just hovering around 4%, a little bit above, a little bit below it. Since the last Fed meeting's actually come down a little bit. Whereas last year when the Fed started the quantitative easing of policy for cutting rates, the actual home mortgage rates went up. So if you up there where you're seeing prices come down and interest rates come down, that sets up as a good environment for home buyers, especially ones who've been concerned about interest rates, the direction of interest rates for the homes, especially with the Fed cutting rates and possibly cutting more, is directionally down. It's actually following the trend right now. Maybe that's showing now that the overall market has more faith in actually what the Fed is doing as a whole. Also tied into the house market and the Fed with their interest rate cuts, they announced that in December 1st, they're going to pretty much stop their quantitative tightening, easing as far as the money supply goes. So they're going to stop buying treasuries, selling treasuries. They're just going to see where they're at. They think they're at the proper level. So all those things play in the flow with the housing supplies. Inflation with housing services seems to be up, and the overall inflation in goods are up. So people are looking to buy homes again. People have been wanting to buy homes, and as they see these numbers come down, these interest rates, like they look at big numbers. So when they see it come down, if you see it go below 6, like people, that'll be some kind of mental trigger as well.
You
But it's early
mentioned,
here.
yeah, you mentioned, the cost of goods, materials, things like that going up. And I know I belong to a group called Business Networking International. And the chapter that I belong to, it's a great group of folks that the businesses come together to support one another with referrals for clients and customers and so forth. But we do have home builders and home renovators in that group, and they've commented in meetings recently about how the cost of lumber and plumbing materials and things like that, copper, all these things are all skyrocketing, and it's pushing them to have to raise their prices a little bit. So it'll be interesting to see how that juxtaposed with the just buying of homes is going to be affected, the developing and building of new homes versus the selling of existing homes. Are we able to tell if new development is slowing down a little bit?
Well, I think new development is slowing down. We have a supply side issue with home buying as well. One of the
Mhm.
things when prices were rising for homes, especially with the new home bills, there was a point where you could buy a new home for pretty much the same price as a already lived in home, uh, not a used home, but someone's already been there, not a new built home just for you. And that was due to home builders concessions, right? They were giving different kind of discounts on their side to get people to buy more houses and stimulate people to invest into their houses, build houses, buy the houses that they were building, offering discount points, things of that such, and then just lower rates, trying to get down below somewhere near the market rate. So that right there affects the supply and demand. So you may see the prices coming down as you see the concessions go away as well from what the home builders are giving to people, because there's only so much profit inside of everything. The material prices are just going up in general, right? We're in the middle of this, I don't want to say trade war, we're in negotiations, trade deals, geopolitical tensions, wherever we're in right now, and prices have just gone up as a result. Fed Chair Powell was actually speaking on this morning or this afternoon as to where there is a one-time price shock. It seems like the Fed is treating it more as a one-time price shock, but prepared to act if they see that the shock reverberates and extends out as far as prices go. I like home builders in 2026.
Yeah. It's interesting how fluctuations are playing out, and of course tariffs are still landing, and then things change again, and we'll talk about that in a second, especially with relationship to China, because I know that's the kind of big war going on right now. Um, but yeah, I'm always curious, and I'm another thing that I'm curious about with Fed rate cuts is do people do we see people also taking an opportunity to pay down debt, because the idea, I think, you know this better, you can talk to this a little bit, but speak to this a little bit, but when you cut rates, the idea is to create demand, right? So that's the housing market, but it's possibly other things too. So what can we learn from you today, Marcus, about not just increased spending because of relative to funding cuts or Fed rate cuts, sorry, but what about, is it a good idea for especially Main Street, who may incur more debt, to balance the decisions to spend more in the spurring the economy versus, I don't know, saving or at least paying down debt for sure? Do we see that happening?
So I think right now, well, I know right now we're in what is called a K-shaped economy. So like people who are uh, ultra high net worth or more net worth are going up, and the people who are lower pressed are going down. So I don't even know if saving and that even comes into play with them as far as
Mm.
it goes. As far as like Main Street is being hit, I think it's more of like we'll have a better chance to consolidate debt at lower rates, perhaps with lower interest rates. The businesses, on the other hand, they will expand their spending, taking on more debt. Usually is how they do it. Let's take an example for just like with AI right now. So people have been talking about circular investments in AI, whereas one company, as usually seems to be NVIDIA, has something to do with every AI company where they're investing into the company. And this is fine. And it's not necessarily circular. The thing is, where is the investment coming from? Is it coming from free cash flow from earnings? Or are these companies also taking on more debt by issuing bonds or issuing anything of that sort to fund this type of investment? Then what's the return on investment from that? The circular aspect is that if NVIDIA invests in OpenAI or whoever they invest in, all those dollars, like I think it's like 60% of the dollar comes back to NVIDIA somewhere around or another between equity or stake in the government's position inside this. So our businesses and our government is going to look to reduce their debt. They were just talking about with the interest rates coming down lower, they're going to look to shorten the duration of their debt, where maybe they can put out some shorter term bonds and treasuries in the effort to repay their debt. That was one of the big things with the deficit that we had. I think it just went over 37 trillion. Is that the
Mm.
cost to repay back the debt is higher with higher interest rates?
Yeah, for sure. Yeah, that's the highest it's ever been, isn't it?
The debt, yes.
Yeah. Yeah. Wow. Well, so where are we in terms of tariffs? I know that what's kind of been dominating the news here more recently is China and over raw materials, and then kind of back and forth. Where I've kind of lost track though in the last few days, where that's landed. Are we still in negotiation? Has anything concrete been decided yet between our two countries?
Yeah, so tariffs are still a fluid situation. They're still constantly negotiating these tariffs. They have some deals, obviously signed a couple of them, but like they announced that they were going to sign India's deal a long time ago. I haven't seen India come across today. They were talking about South Korea. They reached a deal to establish the tariffs on the autos that are coming in from South Korea and North Korea. Tomorrow will be a big day with the meeting of President Trump and Xi as they sit down and talk. That's going to really be an inflection point, maybe a historic one. Who knows? Just for where we are in the world right now. So the tariffs are still ongoing. The critical materials seems to be one of the things that we're really pushing the button on with China. China recently, I think this morning or overnight, made their first soybean purchase in maybe all year. So
Oh
that's a
wow,
sign of good faith from China
that's
as they
big.
go into these negotiations. Yeah, so it's just like
That is
tariffs
big.
are very
They was an all
fluid.
out ban for a while there, wasn't it? Quite for most of the year, I think.
Yeah, like they literally just made the first purchase of soybeans, and then so they have soybeans and critical materials. We have Nvidia, some of those technology AI things. So it's just where is it going to balance out at? I think Russia announced today that they tested a new uh, subatomic missile, like that goes underwater. So it's like
Mm.
that can't be intercepted. So all across the world, you have tariff tensions, and people are just using tariffs as a part of bigger negotiations. But all that being said, it comes back and people are feeling on Main Street. People's Christmases are going to be a little bit more expensive this year. I think the president mentioned earlier this year, maybe people have one doll instead of two. He said it tongue in cheek, but I think that's kind of what people are having to realize is people order these Christmas presents, and the retailers, they order these Christmas presents way ahead of time. So they're out on dock, like they order them in the springtime. They were ordering this stuff right when all the tariff stuff was happening. So Christmas will be a little bit more expensive this year for everyone.
Mm. Wow. Yeah. Yeah. Well, as we've been saying, I mean, it takes a while for these things to come full circle, and then with the situation of still being pretty fluid and constant change, it's going to be a while before we see the full impact, and I'm sure there's going to be a lot of back and forth. A final thing I'd like to ask you about before we sort of wrap up this month's review, and I want to give you an opportunity to just talk about anything an additional that you may have on your mind, Marcus, that I haven't put into a formulated question. But The tech giants, layoffs, lots of layoffs. I worked in, as you know, we've talked offline even. I worked in the immigration policy issue for many years, for quite a few years, and so I'm very aware that right up until recently, right up until Trump was elected again, I'd say, the Silicon Valley giants and all, and Microsoft, Amazon, Google, you name it, we're just always pushing for, we don't have enough workers, we need to bring in, tens of thousands of people on H-1B visas. And we were doing that under previous administrations, regardless of party. And now I'm left to to wonder, well, if those were such an urgent need, why now the layoffs? I mean, I feel like in many ways workers are getting caught betwixt and between, regardless of whether they're immigrant workers newly arrived for these jobs, or they're native born, or green card holders that have been here, on permanent authority for a long time. I mean, it's affecting, it has the potential to affect a lot of jobs, and is. So what's going on in those industries? I mean, is it just as simple as what some people say, that some of the workers are innovating themselves with AI and other innovations, perhaps, that they're just innovating themselves out of their own jobs? I mean, I've heard that here and there, but it seems a little oversimplified to me. What do you think?
Yeah, I definitely think that's a little oversimplified to say people are just innovating themselves
Yeah.
out of their jobs, but some people are definitely doing that. But hopefully, in the term when they're innovating themselves out of their jobs, they're like creating themselves another position to work over the job that they're creating. I did want to say one more thing about tariffs. We speak about the tariffs increasing costs. We have
Sure.
to look at the tariff revenue. So there's a lot in the courts as to how the tariffs are going to play out with the revenue that could offset some of this inflation, because uh, GDP is growing. It's slowing, but it's still above inflation. That was, I think, the last reading was around 2.83%. GDP is like 3.8, so it's still outpacing inflation. But as far as so you see people like yesterday or the day before, 14,000 jobs from Amazon laid off, and the stock price goes up.
Hmm.
Realize that people see that as efficiencies in the company, right? They're spending money on this, they're spending money on that. All these major upscalers or hyperscalers are spending money on AI, right? So you only have so much money that you can spend uh, inside your balance. You got to earn money, you have to put it down to the bottom line profit. Some of that money goes to wherever. You have to make cost cuts, and they're cutting people, I guess, in efforts for efficiency with AI. AI isn't creating jobs, but when you hear something like 14,000 jobs getting laid off, you can't attribute that all to AI. That's not all AI. This is just sometimes companies are trimming, sometimes companies are taking advantage of an opportunity, kind of like maybe with the price gouging when it happens. When people say our prices are going up, and it just kind of gradually happens all across the board. Companies have
Yeah.
started announcing that they're trimming. It started with Meta a few years ago. They announced that they were going into a year of efficiency. I think their stock price is like $160. It's like over $700. So just once people want to see efficiency, they want to see return on investment. So right now, with the phase of AI we're at, people are going to start wanting to see the return on their investment, and perhaps companies are saying we're increasing our investment by reducing these jobs, reducing some of these administrative tasks that people use, clerical tasks that we can just have with AI. So AI is disrupting the job industry, but AI won't destroy the job industry. It's just going to disrupt it. People have to adapt to AI. It's not going anywhere.
Yeah, I agree with that. I certainly am in that learning curve myself, and I use it all the time. I use it daily at this point. But it's an interesting conundrum for workers, though, in some cases, and not just within the tech industry. It spans out into to other industries as well, as jobs begin to change, and even the skill sets within jobs that aren't specifically considered a tech job per se. I mean, all jobs are technical nowadays, to one degree or another. So,
I mean,
yeah, it's definitely a factor.
UPS just laid off 5 digits worth of workers, and their stock price shot up which is another thing. UPS, as far as like you were talking about tariffs, their stock shot back up, or it rose back up, which could point to our economy speeding back up. The Dow Jones Transportation, that's just like a breakdown of the stocks inside of Dow Jones that specifically show transportation and goods being shown. Usually, if those stocks are down, that can be a leading indicator for like recession or recessionary type signals. But it seems that those stocks are starting to recover now, which means more goods are being shipped to people. The reason it would be recessionary is if it was implied that less goods were being shipped out into the economy and people were consuming less. Since UPS, I'm expecting FedEx will probably have a good report as well, as far as like what they're delivering volumes. Those things point to a stronger consumer and to a stronger economy.
Well, I
Uh,
certainly agree with your, logic, and it's just kind of the way that things work in a capitalist system, that as companies look to become more efficient or shift investment for new opportunities such as AI or whatever else is on the horizon, it can lead to cutting jobs. But I can't help but wonder what Main Street is supposed to take away from this. Where the profits are going up, jobs are being lost, and we don't really have um, a certain sense of the unemployment rate right now, do we?
no, private data. ADP is just they're releasing a report that they announced. I think yesterday, or the day before. It's going to be some private data information. The
That's good.
Fed, the FOMC, still gets like state level initial jobless claims. They still get jolts. So they get some information. They're just not getting all the information. They can't make a fully informed decision. But I mean, if you look at the pie in the sky, you can see kind of what's going on. If you listen to Main Street, that you feel the pinch is growing there. Like Main Street's truly feeling the pressure in this type of economy that we're in right now.
Hmm. Yeah, yeah. Because I mean, people who are not just out of work or looking for jobs, but maybe worried about losing their job. Sometimes this picture can, if you're not deep into the data and all, and watching the market every day, it's almost looks like something's askew, right? That so many people losing jobs, and yet profit is going up, and the GDP is notorious for not necessarily always having good metrics when it comes to things that are more difficult to measure. The quality of life, happiness, and well being. Um, to what extent people are there may be participating in the economy, but they might also be doing it through three part-time jobs if they can't make ends meet too. Sometimes the GDP doesn't have reflect always how people are actually experiencing the reality of so-called growth.
Right.
So
And even on that side, you have consumer sentiment polls, surveys that are coming out that consumers maybe
yeah,
starting to get a little bit shaky, but then you get like Bank of America or Visa report and they say that people are spending as much as ever. So people are saying one thing and their pockets are doing another thing. Maybe they're being forced to spend more money on their credit cards because they don't have as much accessible savings, but money markets are also at a really high level. So
yeah, yeah. Is there still a worry about stagflation? I know there was some predicting that and concern that was going to happen.
I feel a little staggy right now.
Enough said. Yeah. Hey, my last question for the day, just because it popped into my head as we were talking about the stagflation thing, and looking from past to present, and so forth, and back and forth. Are you going to read Andrew Sorkin's new book, 1929, where he predicts there's going to be a huge crash again, similar to then?
Maybe I have a lot of books that I'm still
It's
reading.
a monster of a book.
Yeah, I
But
mean,
yeah,
I've read a good bit about 1929 too. Not obviously. I think he said he spent years writing that book, so obviously he's done
yeah.
much more in depth stuff. But I mean, like yesterday was the day the market crashed. Yesterday and today in 1929, or like the days that were the biggest days in the dip. So, but there are a lot
Oh,
more systems set up right now. Like one thing about our systems are so 1929, you had that huge crash, and then they created the Federal Reserve Act. So we create things to so that history won't repeat itself. But history is
really?
similar, right? It's like you had the 19th
Yeah, and I think we have, and I'm curious whether those are holding up or not. I get, it's kind of something that some people say we're in danger of repeating the past in spite of the efforts to put guardrails in place. But um, I don't know. I think it's still too early to make such an ominous prediction. I don't know. What do you think?
Well, I mean, another thing, a difference between 1929 and 2025, almost 2026, is the speed and technology with which we get information. When that
That's a
stock
good
market
point.
started crashing back then, they didn't see the quotes or anything for like hours. So they didn't know what they were doing. They were flying blind. So even as we consider ourselves to be flying blind now, we're at a peak of information where it's just obtainable and available to people. So like if stuff starts crashing, you see the recoveries are much quicker now. Like we have dips and they're much quicker. So
Yeah, that's a great point, Marcus. That's so true. I mean, the advancement in communications and the speed at which it happens and the access that even the normal person on Main Street, has can make a huge difference. Yeah. So that's uh, that's a good positive note to end on, I think, today. Do you have anything else you'd like to add? Anything really burning that you want to share?
anything burning that I want to share.
I think we covered a lot.
Yeah, that could cover a lot. Just Main Street, just stay focused. Just remember that the market could go down some more, right? You
Yeah.
see,
And diversify, right? I mean, I've been talking to my advisors about two things. And some of that has to do with just my personal stage in life of being, in my mid 50s and thinking about, what kind of changes I might want to make as I look, still retirement's a long way away, but still, thinking out and, looking at dividend return stocks, that kind of thing. And then also some diversification in areas of interest into some international markets, maybe a little more, but mostly I'm getting the advice, and I'm curious whether that's what you would tell your clients too at the ABC squared. Mostly, I'm just being told, we're just let's let things settle down. Don't make a rash decision and you know make a huge change right now. Do you agree with that?
yeah, I mean, you definitely don't want to go in making rash decisions with the market's at all-time highs or when the market is swooping towards all-time low. Like you don't want to jump into that, but you can't time the bottom and you can't time the top. Diversification does help out. Every individual is different, though. It depends, like you said, you're at a certain stage in life where your investments are probably different. You're probably looking where you have a few more years with growth, and then you want to look at protecting what you accumulate. Someone younger than us, they're looking more at just accumulating and growth at this stage of
Right.
life. They would be invested different. But yeah, if you invest in different areas and you have a diversified portfolio, you don't want everything correlated. You need some things that aren't going to work all the time. Then you should be fine. Eventually, it goes up and to the right.
Yeah,
I
for
guess
sure.
this might be up and to the right on the camera, but yeah, it goes up.
Yeah. Yeah. Thank you. Yeah, that's consistent with what I'm hearing in other places too. Well,
Oh,
Marcus, I think this pretty much wraps things up for our October update. And folks, do check out his LinkedIn page. It's the ABC Squared. Marcus gives great blog posts on there, and newsletter articles, always focused on what's happening currently in the market, and gives his take on it and what he thinks we should take away from what we see happening in the news and wherever else. So I encourage you to check that out. Marcus, I'm always honored to have you on every month, and look forward to our next update.
awesome. Yeah, and thank you, Christy. And one more thing, we'll be remiss not to mention all the government workers who are out of work right now. I know we spoke about it broadly. I'm seeing an increase
Absolutely.
down here with people reaching out and using food banks and those type of things. So they're in our thoughts. Hopefully, this shutdown gets resolved before we're talking again next month. But it may not
I
be.
sure hope it does too. And I'm seeing it, living in the Washington, D.C. area, I see it acutely. I have a neighbor that just told me she was laid off, here in the last couple of weeks. So, that's not a one and done thing. And people do, I mean, it's continuing to happen that there's more and more people being let go every day. And that's still an ongoing process. So yes, absolutely. Our heart goes out to those folks and to anyone who is struggling to find work, has maybe lost their job for whatever reason. It's a tough economy right now because there are a lot. We talked about this last time, Marcus. A lot of businesses, even if their returns are still stable, they, especially smaller or mid-sized businesses, a little bit cautious about hiring. So there's not as much hiring happening as what we have seen before kind of the tariff thing started, I think.
Yeah, I've heard numbers as long as people's duration of unemployment right now is like 27 months uh,
Mm.
for duration, and the government shutdown. I think they said right now, if it ended, it has cost $7 billion. If it goes to the end of November, it'll be $14 billion.
And not to, I don't want to. I know we were getting ready to wrap up, but you're bringing up the federal workers is like it's a button but button to push for me a little bit. Like I said, I know neighbors and friends right here living in the DC area, and of course federal workers are all over the country. So many of them have been laid off in our national parks and agencies where things aren't getting done, and there's a lot of things not getting done that are crucial that actually literally can mean the difference between um, a life and death for some people, because not just talking about the things you think of first, like entitlement benefits, although that's important, and of course SNAP has been affected recently, but you also have programs like the vaccine injury program that a lot of people aren't really all that up on. I know about it because my husband works in the industry as an attorney, but right now with the shutdown, you have issues where people just aren't their cases are not moving through as quickly, and everything in the courts takes a long time to begin with for important reasons, but it's even slower now. So people who had a vaccine injury and get paralysis or Guillain-Barré syndrome and CIRVA, frozen shoulders, extreme, permanent frozen shoulders, all kinds of neurological issues. Um, some of them have been waiting for years for their case to settle, and that's only slowing down that much more because of the government shutdown. So, there's a lot of people affected that aren't automatically visible to us as we're walking down the street. You don't know a person's story and how they may be affected. Our government is big, but it serves a huge country. We're 2.5 billion acres. Not all of that's inhabitable, but a good portion of it is. Most of it is, and so it's a lot of people to look out for in different ways. So it's a major problem, and I hope that our I don't do politics on this show, but I hope that Congress can get its act together pretty soon.
Yeah, open the government.
Yeah, absolutely. Open it up. Let's go. Marcus, thanks a lot. I always learn something new from you every month. It's great to have these updates. I hope our listeners and viewers feel the same, and we'll be getting this out to you very soon, folks. Have a wonderful rest of your October, and happy Halloween. Hope the families and children have a good time enjoying their trick-or-treating. Are you taking your kids out, Marcus?
Maybe. I guess. I don't know. Be dressed up. I don't know if I'm going. Yeah. So yeah. Yeah. Just
Yeah.
thanks again for having me on for the October recap, November outlook, good stuff. Let them know. I really
Always my
appreciate it. Looking
pleasure.
forward to it again.
Absolutely. Always my pleasure. All right, Marcus, have a good one, and we'll see you next month.
All right.
Hi, everyone. Welcome back to Policy for Normal People. I'm your host, Christy Amata, here again with the monthly market update with Marcus Sturdivant Sr. Hi, Marcus. Welcome back.
Hey, Christy, how are you?
Doing okay. Folks, we're a little late actually getting the September update to you, which is what this is. We're well aware that we're into the first week of October, but I'm recovering from a surgery. This is my first time really back at it, and it took us a little bit of time to get things together, so we appreciate your patience. But as I said, this is Policy for Normal People. I'm your host, Christy Amata, and this is our special monthly edition, monthly market update with Marcus Sturdivant of the ABC Squared. Marcus, happy fall. I hope that your kids are well adjusted into school and everything's going great for you. I hope the colors are as vibrant there in North Carolina where you are as they are here in Virginia. How are things?
Things are going well down here. Life's all right. The weather's changing, the fall's happening. The fall in the stock market hasn't hit yet. Maybe it's not
Yeah.
coming, but
Yeah.
the yeah.
Well, let's get into that. The fall in the stock market is something that you know does get talked about, and we're seeing some conversations about it here and there in the news, and wondering when it is going to happen or when it is going to fall, right? So September, another crazy month for markets, I think, it's fair to say. We had a rate cut by the Fed, missing a job report. We've got the government shutdown, of course. So, Marcus, what's on your mind for the September summary?
Yeah, so as far as September goes, just jumping off with the fall, there's a concept called the September effect. I don't know if it's more mindset or more actual effects. It's where the stock market generally declines in September. It'll start strong, go down towards the second part of September, and then October has generally been the weakest month in history for stock markets. But you have to think about some of the events that happened in October with the stock markets, Black Monday, 1987. These were October, so they skew the market when you look at those histories. But in general, the stock market is just churning on, churning on. One reason is the unfortunate government shutdown that we're going through right now. The stock market in general in history, when you have a government shutdown, as long as it's not a long duration stock shutdown, the stock market tends to do better. So even with the Fed's rate cuts, another boost to an economy that people think could use the rate cuts as far as housing market goes. You have we don't have the data coming in as we talked about with the government shutdown. So we're lacking some of the data. People are turning to other sources for data. So they're turning to the private markets like the ADP. The Chicago Fed office has a tracking tool that mixes individual data with private data. I think they use some of the state data and they come out with figures. So their figure would have been, it's not official, but around 4.3% unemployment. So that's generally around where we've been trending. The inflation number that we didn't get, uh, or that we may not get due to the government shutdown, that'll be a little more tricky to track from the private market. But we feel inflation as consumers every day.
Mhm. Yeah, would you say that the inflation we're feeling is the same as say a couple months ago, where it was maybe more cost push oriented to specific types of products, depending upon what was being specifically hit by tariffs versus maybe longer term effects or the overall economy? Because I know that a lot of economists have agreements and disagreements about what to call inflation or when to say we're in an inflationary period versus a few products or a few services being affected versus in converse to the whole economy, for instance. So what's the general consensus, if there is one, on are we in an official overall economic inflationary period?
I think so. Inflationary pressures are definitely higher right now. Inflation has been felt differently this time because inflation, I think, is hitting different sectors. It's not hitting everything at once. I
Mhm.
mean, generally prices are going up slowly but surely, but like certain sectors are feeling it more. And it was rolling maybe with the impacts of tariffs, and certain sectors and tariffs impact was hit harder as it rolled in to be figured out by the corporations. As I mentioned before, corporations they'll figure it out. They're going to pass these tariffs off either partially to themselves, partially to the country they're receiving them from, and then partially to the consumer. So it's just a matter of the mix. Uh, to begin, the companies and the producers seem to be absorbing most of the tariffs. So the inflation has seemed to be rising slower or staying consistent. But eventually, that'll have to be passed on more to the consumers. As shareholders and stockholders want to see more margins in their stock prices. That's just the way of the world with investing in corporations.
So you're saying that there's been some pass on to consumers, but we're not seeing quite the hit that we might possibly in the future.
Correct. We could see a higher hit with tariffs, and that's also one of the things that the Fed is talking about as far as like the balancing out. They're not sure if this is a one-time price shock from the tariffs or if this will be continued pressure from the tariffs. Without having data coming in right now, you also have cloudy and foggy views as to whether this economy is growing. Because if the economy is growing really fast, you don't want to cut interest rates in a growing economy. That's going to create more inflation, right? You
Yeah.
don't want it to grow rampantly uncontrolled.
Mhm.
So all that being said, uh, the inflation in the housing market, if you look there, so we're talking about sector wise, look at the housing market. And I know I feel good about the housing market coming into the second half, but just uh, earlier today, I saw like the 15-year is under 6%. The 30-year is getting closer to 6%. I think at the beginning of the year, the 30-year was 7, 7.4, 7.14, and
Yeah.
right now it's
Yes.
pretty much 1% below that.
Mm.
So housing markets and mortgage rates take a long time for those type of inflations to come down, but directionally inflation is coming down. So it's in different sectors where it's rising and where it's falling.
Yeah, and I want to come back to that concept about things, certain things taking longer than others to catch up and how they can influence one another, policy versus the financial sector, that kind of thing. I want to come back to that in a bit. So you mentioned unemployment, and I believe you had said earlier in the segment that it's kind of been holding steady, but it was what was the percent again? 4 point something?
According to the Fed's, Chicago Fed's system that they run, it's not the official one because they don't get the official data. I mean, like I said, it's a compilation of the ADP, like private data information and some state information, but it's at like 4.3.
Okay, okay. And I know on I think it was Moody's, couple places, Squawk Box, just the general places that a lot of people see financial news, like myself, just quick in the morning. But the uh, the feeling was is that companies, and you mentioned this too, they're kind of waiting to see what happens a lot, um, so that they're absorbing the tariffs for now in some cases, but they're also not hiring as far as we can tell. So we're seeing that. What is the change, if you remember the change rate, from say, let's say the beginning of this year roughly to now in the unemployment number?
The number has been wanky, or that's not really a good word to say, but it's been out of sorts, so you just got to look more at the percentage. It's been right around 4.2, 4.5. It's been in that range, 4 to 4.5 the whole year, pretty much. The thing that you need to look for with the unemployment, as these numbers say the same, is the duration of unemployment. So like the JOLTS number, jobs over lost turnovers, you need to see how long people are staying unemployed because okay, so we have inflation. If we have inflation, even if inflation continues to grow, if you have wage growth and growing GDP, they can kind of combat each other, right? But when people start losing their jobs and then people start losing their jobs for long durations, that's when the economy could falter or buckle. Like that, not having jobs and not having money to spend is when the economy really, really would start to feel the pressure. Inflation is bad. Right now, we're more towards I hate to say it, maybe stagflationary situation where we're just kind of stuck with this inflation, stuck where we are with the jobs market. But if this duration continues to extend in unemployment or people who aren't even going back to work or the underemployed, people who are, doing jobs that they're not technically trained for or qualified for, those type of things start to show cracks in the economy.
Yeah, yeah. It's all kind of interesting. I think how this is all going to play out, and certainly, um, you feel like sometimes that news reporting on it, there's always this it's fast paced, and it's the same thing with the change and turnover with policy making and all, the politicians or people, getting elected office and then new people coming in. And so I wanted to kind of return to sort of the pace of things and your comment about how long it can take for certain things in the market to take shape versus others, and how those are influenced by other factors that are moving faster than, say, the financial world. I got a question for you, and it was just something that was on my mind last night because I was reading an article in the Time magazine. And folks, if you're interested in taking a look at it, it was by the author Justin Warland, Shifting Winds. So, this article was about clean energy and the clean energy transition. And I got to thinking about that we were going to do this, have this conversation today, Marcus, about the overall market. And of course, clean energy, a lot of companies, big companies, as well as banks, large banks have been investing in clean energy for some time now. And of course, they were hoping to take advantage of some of the opportunities that would have been in the previous bills from the Biden administration, the infrastructure bill, and so forth, some of which are there, some are going to phase out, others are going to be completely eliminated, unfortunately, where clean energy is concerned in particular. And so, reading this article, um, it seems, according to the article, that large banks like J.P. Morgan, they met recently with some other big wigs in Scottsdale, Arizona, and they're discussing the dilemma that they're in. And if you just listen to the political reporting, you would think that clean energy transition is dead. Like, that it just died. It's dead on arrival with the incoming of the Trump administration and Republican control of all three branches. But I've often thought that, and this article alludes to it as well, that the mistake we make about not only how we talk about clean energy transition, but also how we invest in it and how the market behaves, that it's never a zero sum on either side. It's never all one, it's not all fossil, it's not all clean energy. Everything just transitions and changes at the exact moment that you want it to, regardless of what side of a person is on with that politically, which of course we don't deal with that here on this podcast. But in terms of financial markets, one of the things that stuck out to me in the article was that companies like JP Morgan, big, who are investing both in fossils but also have been made significant investments in clean energy, they get criticized from both political sides of the aisle for that. But they've really got a dilemma of they are invested in clean energy and have been for some time. And so even if politics changes rapidly, there's no guarantee that the financial sector can make those kind of whiplash changes, nor might it be in their best interest. I'm just curious what you think about all that. What do you see as evidence maybe in the markets of these prior commitments to clean energy goals, even if it's not an emissions specific goal, but just that they're going to continue working on transitioning gradually from fossils to cleaner energy. What do you see happening in terms of what they may do in the markets, or is that another wait and see kind of scenario?
Um, yeah, so I think you actually pointed out a lot of good points in there. Actually, how everyone's balanced on both sides when it comes to investing in clean energy versus fossil fuel.
Hmm.
Go back to the 70s when people couldn't get gas to the 80s where we started, we were going to make sure we had gas with Reagan, Bush, we had gas. Then Al Gore was running for president. He was one of the first people to really push climate change, those type of things. So that administration, well, Clinton was president, Gore was Clinton's vice president, but that was one of his initiatives when he did run for president. So that started a conversation, back, and then Bush, Iraq, all these things. So it's been a constant shift, Obama, Trump, Biden. So let's just go from the Biden to current, right? Because that was a big shift with the EV credits. We had legislation pushing towards more EV credits for people to purchase EVs, for you
Yeah.
or dealers to sell EVs. They're setting
Even
up.
he kept some of the initiatives that the first Trump administration had because we ended up with the war in Ukraine. So we're always fighting this current energy demand, which right now, is still fueled a lot with fossils. And even clean energy relies on, like electric batteries rely on the sourcing and extracting of fossils. So yeah, I'm always fascinated by the how the conversation maybe doesn't sometimes meet reality and how the markets get maybe caught in the middle. Would you say they get caught in the middle?
The markets are caught in the middle, but the markets move fast. These banks are moving slower. They're going to allocate
Oh,
there are funds for, I guess this last administration, it was clean energy. They just moved some of those funds more towards the fossil fuels because even when you're using like nuclear energy, you need like coal and fossil fuels to run the facilities that's going to create that until they figure out a way with the natural gas how to do those things. So yeah, banks are investing in those type of things on both sides, playing both sides of the field because they know the political environment is going to change. It always changes.
mhm.
Um, this stuff isn't in law. It's set up where it can be changed every 4 years depending on the administration, right? Depending on the legislation coming out of the office, the temperament of the country. So these companies make huge investments and they make long-term investments. So they can't shift on a dime just to say, all right, we're done with this facility, we're done with that facility. Because the
Exactly.
people who are building these actual facilities, so JP Morgans of the world are lending money to these companies to build these construction companies who have to hire workers and build materials. But if you just take all of that funding away, you can't just outfit a building that's been built for one type of energy into another type of energy. Just like it's not as easy as people think it is. It's just
Yeah.
not that easy to retool a facility. So yeah, the money's in there, the money's moving. I think it's just more of a shift to where the money's actually going and what the actual like bankers and investors are talking about. Because Chevron ExxonMobil, I heard those CEOs speaking just about how, yeah, they thought maybe some of this fossil fuels were obviously good for them, but everything like some of this clean energy stuff, they didn't really know, but they just kind of went along with the administration because it's just easier not to fight the administration when they know they're going to be there longer.
Yeah, yeah, and I think we're in a um, an era where there's a little bit more spotlight on banks and companies, just by the nature of communications, between the government and those companies. That's a little bit more public facing maybe than we're used to seeing sometimes in the past. So that can put pressure on what their decisions are too. But it was an interesting article, and I just was curious what your thoughts were on it because overall the article was alluded, talking about how the banks in particular, but even large companies who are receiving those funds and investments, trying to work through a dilemma of they're really the despite what's happening politically um, and even in policy. I think we have seen enough public interest, enough change over the last 20, 30 years, especially um, towards a climate conscious society in a way that isn't easily reversed by one or two policies and as you pointed out every 4 years there's another change that's possibly coming, so it will be no pun intended, interesting to see how companies, banks, and the market in general weather that storm in that topic. So we'll wrap it up, but just wanted to give you a moment to offer any other final thoughts, especially what are any implications or thoughts you have that are helpful to Main Street relative to how you try to help them meet Wall Street.
Perfect, right? Yeah. So helping Main Street meet Wall Street. I don't think I even gave you an example from the last question. So let me give you a quick one with that. As
Yeah.
far as like the climate change and the shift in policy, just take Tesla for example. Their stock price has been surging. The EV credits are expiring at the end of the year, or before the end of the year maybe. So people are pushing to buy the EVs if they want to have them now with those tax credits, which were reduced earlier this year. Anyway, but as far as what I want Main Street to know, Main Street to meet Wall Street. Just uh, information is key. There's a lot of information out there. Be careful with the information you take in. I don't want to say fact check because I know it's like a bad word now, but like double check what you're looking in. If you're going to invest in something, please invest in something that you understand. Don't go out here and invest in something that you just hear or think about or just see on a social media stream. And the market trees don't grow to the sky. So if you see a market correction or a market dip, don't panic. Don't go sell everything because if you're investing in stocks or bonds, anything like that, it's only a loss if you sell. Otherwise, it's just a paper loss. If you can weather the storm, history shows that it'll come back up. But we're in the middle of a bull market right now that could run for years or it could run for a month. We'll just see how it goes, depending on the political environment and depending on if AI is just, if AI came out and was just obviously, I don't think it is a flash in the pan. You would see the market go crazy.
Well,
Like
this
in
is
the
this is
wrong
what
way.
the ABC squared helps people do. This is what you do, right? You help people weather these storms and understand better what their choices are. So, folks, check it out, the ABC squared. And I think you can definitely find Marcus on LinkedIn. And what's your website address again? Is it abcsquared.com?
Right? That's my website and have a YouTube channel I just started. So some videos on there, offer some financial literacy and
Fantastic. Great.
stuff with you and I on there, Christy. So
Yeah, absolutely. Yeah. And we do this every month, folks. Thanks for joining us. Thanks for listening in or watching, depending upon where you get your podcasts and how. This is Policy for Normal People with Christy Amata and Marcus Sturdivant Sr. of the ABC Squared for our monthly September market update. We'll see you again at the end of October for this same type of segment. Thanks a lot, Marcus. Enjoy the month.
thanks, Christy. I'll
See
see you
y'all.
next.
Bye bye now.
Bye bye.
Okay, welcome back to another episode, a special episode actually, of Policy for Normal People. I'm your host, Christy Amata. This show is sponsored by my consulting firm, Amata Development Services LLC. You can check it out at amatadevservices.com. That's amatadevservices.com. I'm a full service and flexible marketing communications and fundraising firm for small businesses and serving nonprofit organizations nationwide. I am welcoming back today, and it's my great pleasure to do so, Marcus Sturdivant Sr. of the ABC Squared. Marcus provides market analysis and financial services to help Main Street meet Wall Street. What a great tagline, as I've said in the past. Marcus, welcome back.
Hey, thanks, Christy. Excited to be back on here with you again. It's always a great time when we get to sit down and just chat for a little while.
Absolutely, absolutely. And folks, if you've listened to previous podcasts, this is a little different. We're experimenting, Marcus and I, with what we're going to call the monthly market moment with Marcus Sturdivant. So at the end of each month, we're doing a very quick, kind of 15 to 20-minute episode that just covers what's been happening in the market. And then I'll tie in a policy question somewhere in there, since this is policy for normal people, after all. So let's get started. Marcus, gee, there's nothing happening in the market at all right now, right? Like, I mean, it's super calm, cool waters. Yeah.
Yeah, right. I know.
Not entirely, right? Yeah. So, could you give us a quick overview for the month of August? Just hit some highlights about what you've been seeing in your market observations, what's going on. We know, of course, that as we speak, I think the hearing for Lisa Cook's firing is taking place and what may happen there, an injunction or otherwise. So, lots of stuff going on. Folks, obviously, since we're doing this monthly, we're not trying to give you, real-time information or even suggestions or anything about the market. We're just providing a little bit of educational catch-up information. If you're a person like me who is trying to follow a lot of things at the same time, not to mention it's time to get back to school for a lot of families with their kids. So we're just trying to provide a little bit of educational information and updates that removes the politics, as is standard for this show, and just gets into what the pragmatic stuff is. So I'm going to turn it over to you, Marcus, to give us a little bit of some roundup for month of August. What have you got?
Gotcha. Yeah. So for the month of August, like you said, people are generally, on vacation. People are getting ready to go back to school. So as far as like investing, that's usually a light month for the stock market. Usually August, September, they have what you call the fall. This August actually has been a little bit different. It's been boosted by some data that has led the markets to believe that we'll be getting a rate cut next month at the September Fed, this next month's meeting of the Federal Office of Monetary Committee, the Fed meeting in September. So they're thinking we're getting a 25% base cut just based on Chairman Powell's speech last week at Jackson Hole. He just came out far more dovish than people expected. I think the data is showing that the uh, spending and uh, government is slowing down. Well, maybe not the spending in government, but the overall GDP is slowing down. So growth is slowing down. We just got revised numbers that revised some of the numbers up, but it's still below the pace that we were expecting for GDP. So with the news um, from Jackson Hole, and then some companies just producing some great earnings reports. The stock market actually was up in August. It's actually been up for the month, led by like small caps. Small caps tend to work better with rate cuts, but the market's been up. It's seeing what it wants to see right now. It's in a Goldilocks area as far as like the stock market. The housing market seems to be waiting on rate cuts starts. That's a bumpy thing. I think the housing market will look to improve. Will still improve in the second half. We saw some improvement in those stocks as well. That area of the market, just with people anticipating rate cuts coming down, hoping that that will in turn lower the mortgage rates. And then as far as like you said, with the Federal Reserve, it's been a big month just testing the limits of what exactly is Fed independence, what executive powers the actual branch of the executive office possesses. And then of course it all ends up in a judicial setting to see. So we're seeing the branches of government all work together, I guess, or maybe against each other, depending on your view. So the market's been churning. The stock market that's been going up, like without the news, it makes sense just because, like I said, companies are reporting good earnings. Bank of America saying consumers are still spending. Unemployment, that number's been pretty consistent. Like we're pretty much at full employment. The difference with the unemployment is the duration just continues to grow. So if you lose your job, you may be unemployed longer versus before. So
Yeah,
that's
I've definitely, I can definitely speak to that. The the amount of people that I've met. Of course, I live in the DMV, the DC, Maryland, Virginia, Northern Virginia area. So a lot of federal workers here. So lots of job loss. I know quite a few people, friends, and so forth that have unfortunately been a victim of that. Um, and that of course is occurring, throughout the country and other industries too. What do you see in terms of hiring relative to the market changes and fluctuations that are going on? Is hiring slowing down? Is it kind of stabilized, or do you see companies kind of just waiting to invest in more workers versus maybe technology or innovation? What do you see going on there? Is it just too early to know how that's going to land?
So it's all mixed in, right? So you have companies that were on hold waiting to see where we would end up with tariffs, which is still a process just to see how tariffs are going to impact companies' cost, impact companies' revenue. We just got the big beautiful bill, one big beautiful bill, however you want to summarize it, passed in July. So people are still working through the effects of that. That really released some capital spending as far as businesses go. Uh, so yeah, companies, and as far as the actual unemployment number, like I said, that number may go up or it may go down, but it's pretty much in that 4.2, 4.5 range is where it's been pretty much around the same time. So percentage of people employed pretty much stay the same. Like I said, we're pretty much fully employed. But once you lose a job, to your point, companies are not as quick to hire people. Part of that could be some of the murkiness in the data, some of the murkiness in the rate cuts, some of the murkiness in tariffs and spending, and some of it could just be AI efficiencies increasing the actual productivity of people and requiring companies to hire less workers. You see a lot of companies, big companies now, Microsoft and other companies, some of these snowflake companies like these, they're just coming out saying they're not hiring as many people to do tasks anymore as AI has taken over some of those.
Yeah, interesting that you bring that up with AI, Marcus. I am myself in the process of following some courses to get certified in corporate communications, to take it sort of to that level, because I've worked with nonprofits more so so far. But I took a course just finished a really interesting course on generative AI for written communication, and a lot of concerns came up among my peers in that class. This was with Cornell University, great class, um, about what kind of jobs AI is going to replace. And the opinion of the professor seemed to be, and he's an engineer, been involved with this kind of technology for a long time, so he's watching the trends for quite a long period. He said definitely it's going to affect healthcare, and it's going to affect computer tech engineering jobs. So some of the STEM jobs, depending upon what you actually do in terms of the function that you perform. So it's really interesting. I think there's a mix of fear and excitement and optimism out there all at once about it. And I know I use it a lot in my job. Do you use AI in your job much?
I use AI sometimes maybe just for like editing purposes. I don't particularly use it that deep for research, just with the hallucinations that AI will give you. But yeah, AI definitely can help you with like some administrative tasks as far as that goes. So I
Yeah.
definitely uh, use AI in those capacities. And people, as far as it goes with AI, like whether you love it, hate it, you probably should dig in and try to understand it, at least understand how it works, because it's that technology is coming. People worry about, and I know it's not a one for one comparison, but you think back with technological advances throughout history, right? So you've had, just think back in the 90s, 80s, 90s when they came out with ATMs. Everyone thought all tellers were going to lose their
I
jobs,
remember that.
right?
Yeah.
But what you
Big deal.
found is tellers didn't particularly lose their jobs. They were just found other places to work in the bank, right? They just found other efficiencies or different ways to use them. So I kind of look at it more that way with AI. Like, yes, people are going to lose their jobs, but it will become more efficient. People will become more efficient in the AIs and the game in AI, and the gain should, in theory, should outweigh the cost. And we are getting to a point where people are wanting to see all this money we've been investing in these AI companies. They're wanting to see returns from it. That's starting to come up in 26, 27 for sure.
Yeah, I expect they are. Yeah, because quite a bit of capital has been directed towards that investment, and I'm sure that people are anxious to see a return. Very interesting stuff. We'll keep an eye on it for sure. Hit a little bit, if you would, on just your thoughts about the Lisa Cook situation. You know, obviously we don't want to focus on politics in this show. You know what the political opinions are around it, but you know, just are there any pragmatic implications from that that you see in terms of affecting market decisions or maybe not?
Gotcha. So yeah, let me preference this with saying I'm not a legal expert, and I think even the legal experts are saying this is kind of like unprecedented territory as far as where we
Yeah,
have
that's
right now. You know, she's being fired. The court hearing is happening right now to see whether they'll have an injunction or a stay to allow her to go to work. Or I think right now her official status is that she's been traveling for work, so they don't really know if she's been in the building or if she's been working for the Fed. You know, in her capacity, she's obviously filed suit against the Trump administration, also against the Federal Reserve Board. She filed that in an
mm,
effort to, I think, protect the board from any actions that may come from the executive branch if they were not to enforce some of the things that President Trump has uh, inquired with this firing. So as far as it goes, like they haven't, I don't think anyone's produced any evidence yet. I don't think she's formally been charged yet. So we can't get too far ahead of like what it really is. But and some of this stuff predates her time as a Federal Reserve official, right? So
mhm.
let's say, and this isn't unprecedented in the fact that Federal Reserve officials have had incidents before with different things, and they usually just kind of resign. But I think the way this is set up is this is a different case just to see the executive power versus what can actually be done with the federal governance. What is actually firing for cause, right? That's the big thing. What is the cause? Are allegations cause? But until like the actual charges have been filed or she's been found guilty, they're just allegations, correct? So could you just fire anyone for allegations? Is this a bigger play towards Chairman Powell? On a larger implication, globally, people look for the independence of the Fed as the American dollar is the global currency, right? So if they look and see that perhaps the Fed can be influenced by another branch of government, is truly not independent, that could that would definitely decrease some of our faith within the international community as far as our stability. And I mean, people have seen what happened when countries are when they allow their monetary policy to be pushed by governments who usually want lower interest rates, right? Because they're paying back their debt with lower interest rates. Things
Sure,
are
sure,
their
yeah.
housing market's lower interest rate, but lower interest rates cuts both ways. So the independence of the Fed at the end of the day is very important. I can't speak to whether Governor Cook is guilty, innocent. I don't think Governor Cook's even been charged yet. So like right now we're sitting here and they're having the hearing right now. So we don't know. So
But it's definitely a educational opportunity moment, isn't it, to just for everyone to kind of pay attention to just what it means in terms of the relationship between, you know, governance and finance, you know, in the country and how the government interplays and intersects at different times in different ways with, you know, the financial policies that come down. And that kind of leads us into sort of a policy, somewhat policy related question I was going to ask, sort of the one question, you know, I'm going to do one question on these monthly calls. Um, for our Main Street folks, and that includes me, what is a basic definition of the difference between monetary policy and fiscal policy? When you hear both of those, and what are each of those, and how do they differ?
all right. Yeah, that's a good question. Right. So uh monetary policy usually affects the supply of money, right? So, and that's done from the Federal Office of Monetary Committee or the Board of Governors, Federal Board of Governors. There are different banks, central banks all around the country, make one big central bank, right? They control money supply, interest rates. Their main focus is inflation and jobs, right? They want to make sure that we have an optimal inflation rate and full employment. So those are their tools. That's what they focus on, monetary policy, right? Fiscal policy on the other side is more from the uh, Congress, the executive branch, the legislative side of it. This Treasury Secretary Bassett people of those means. So think about the big beautiful bill. That was fiscal policy. So it goes in involving tax cuts or how we will go about um, not interest rates, but like tax cuts or extended tax cuts, deductions, things of that sort. That's more going to be towards your fiscal policy. How we're paying the debt is also fiscal policy, right? How much the debt's going to be is fiscal policy, right? So that's another thing. Like as you hear in an ideal world, the fiscal policy works independently of monetary policy, but they all work together in the sense that if the deficit's out of control, hopefully the rates that we're paying back on this money, which is set by the monetary policy, uh, the interest rates, hopefully they're optimal for us to be able to service this debt while not increasing the debt, but not so low that we're just going to let inflation run wild, let spending go out of control. So it's a really delicate walk. But just generally think with monetary policy, think money, money supply, how much you have. Fiscal policy, think federal, think legislative, think policy, or think legislation. Does that answer your question?
Yeah, no, it absolutely does. It absolutely does. I've done a good bit of self-education on those two as well. I've been into a big book by Alan Binder, who or Blinder, I think it is, who was a former I think Fed official at some time and economics professor and all. And I always find it really interesting how economists talk about each of those types of policies versus, say, someone in the more political, analytical media or something like that can often be very different in terms of how they evaluate what is good for an economy, what's not, and where we fall in between. But I think it's definitely as complex as those two are. I think it's important for people to understand, and I know I want to continue to understand it better, that they do impact each other, and the decision's kind of a very much a action reaction kind of situation, right?
Right. I mean, think about with the so fiscal policy, they in the original Tax Cut Job Act of 2017, they lowered the corporate tax rate, right? So that corporations weren't paying as much for taxes. That should increase the amount of money they have to spend for hiring, right? They made that permanent. So now you would think that even if on the other side, the monetary policy was to lower interest rates to increase more money for businesses to hire people. So that's how they could also work together. Even if the interest rates were to go up, you would go up a little bit, which takes time for that to flow through to businesses. You would still have the lower corporate tax rate. You see these lower deductions and tax rates on the fiscal policy that should stimulate small businesses to spend. And if they're stimulated to spend, the monetary policy on that side is they're going to need to get money from banks at hopefully lower interest rates.
Yeah, and good point about the lagging indicators, right? I mean, the impact factors, they take a while to take hold, both in what you just described and then also with inflation. It takes a while. There may be some initial cost push inflation in various areas that's not relevant to the whole economy. And I think we've seen some of that. So it's still kind of early, I think, to really tell what's going to happen like after about 2 to 3 years as these policies are firmly in place and businesses have had a time to adjust and things. Would you agree that we'll have a better view of what the long term may look like?
Oh yeah, we're in it right now. We're in the middle of it. We can't see all the stuff around us, like how this is all going to play out. People are
Yeah,
basing things on their projections, but it's really unprecedented the things that are happening in our economy right now and the way they're happening. Just different type of with the whole global trade rebalancing, the whole another thing that we have to think about with monetary policy and fiscal policy is immigration, right? And the job market. So we have fiscal policy that's becoming more or legislation that's more restrictive on immigration. Hence, it's going to lower the amount of people who are able to come into the workforce because a lot of the workforce has been driven by immigration, legal or illegal. That's a whole nother topic, right?
sure,
So
sure.
companies were slow to hire in that sense as well because they didn't want to necessarily hire someone who, could just be picked up from the job.
Yeah. But would it also, is there also a potential opportunity for native born and existing immigrants here to pick up some of those jobs where there's less competition with immigration. Is it kind of a double-edged sword that way?
Right. And that's the kind of stuff. It's yes, it's definitely an opportunity for anyone to for other people to step into those voids. Maybe there are jobs they want, maybe there are jobs they don't want. Uh, I don't know. It depends on the visa, depends on the job.
I think it's going to have a more of an impact perhaps with your higher paid jobs like the H-1B types where you're looking at STEM jobs because I know there's been fierce competition between the H-1B immigrant that's newly arrived or sponsored by their employer versus the native born American or green card holder, for example, permanent immigrant here legally in the United States that is maybe graduating from our colleges and universities, especially in STEM jobs. I know it's really affected them, and it'd be interesting to see if maybe there's a balancing act that happens there. But policy certainly is reshaping that. So it'll be interesting to see how that lands. Again, it'll take some time to really see. I can appreciate what you're saying too, though. The lower paid um, labor jobs, agricultural, dairy, meat packing, that kind of thing. Um, as those numbers decrease with immigration, it'll be interesting to see whether or not the agricultural industry will decide to mechanize where they maybe could have done that a long time ago, but still relied on the cheap labor, or for areas where maybe that's not possible. Maybe there'll be some kind of balance struck between do we need immigrants to do that versus is it really true that Americans won't do the jobs if you pay a better wage and you provide security, safety, and benefits, which unfortunately those kind of things don't get offered to illegal immigrants or illegal aliens. So
Right. Or will those jobs just fade away like with the printing press?
exactly, exactly. I
Or
had a
even
great
more,
grandfather who was a telegraph operator. You're not going to find that anymore.
right? Or telephone operators, like the literal operators who would move the
Oh
line,
yeah, yeah, yeah.
or even sticking to agriculture, the cotton gin, right? That took a
There you
lot
go.
with like industrial revolution. And
For
then as
sure.
far as like the gross number of the people in the employment number. So that's what makes the Federal Reserve's job even more fluid because yeah, how many of those low volume, low earning income workers are out of the data that were immigrants, that were not immigrants, how much of that is being filled? It's just, yeah. So to answer your original question, this will be a case study for people some years from now. This time, just think about from COVID, that's going to be one. And then like from when we've come in, I think both Trump administrations will be, obviously Biden's administration in the middle of it too. These things will be case studies just in history, like the way the government's now industrializing. Government's always industrialized some things, but like just stepping into Intel and taking a stake in Intel, 10% stake in Intel for money from the CHIPS Act. This economy's flipping, the way government collects income now is changing. So it's just a fluid thing. Excited to be able to do this every month with you because
Yeah, you
for
too.
an
I
hour every
learned
time.
so much from you, and I hope that our listeners appreciate that and enjoy it too. And that does bring us to the end of our time. We may have actually appropriated just a few more extra minutes than 15, but that's okay. Great stuff, Marcus. Thanks for that overview. And folks, if you're enjoying the show, we hope you are. We hope you get some benefit from it. I know I do. That's the whole point of why I started it, bringing on experts like Marcus who can talk to us about the various policy related issues and market. So thanks, Marcus. I'll look forward to seeing you again to do a roundup next month. And folks, do visit him at LinkedIn. The ABC Squared is the name of his business. Mine again is Amada Development Services, amadadevservices.com. Visit me there if you need any marketing communications or funding support. Be happy to help. Enjoy the Labor Day weekend coming up, everyone, and we'll see you next month. Have a good one, Marcus.
Thanks. You too, Christy. See y'all next month.
Take care.